Hi, Warriors. Good whip around Wednesday, everybody. Hello, Alexander. Ingmar, how you doing? Bran. Okay. Don't have to trade. AJ, how's it going? Payman. How are you, little brother? Ryan, how you doing on whip around Wednesday?
Whippy Wednesday. Oh, I like a good whippy, Mr. Whippy. It's an ice cream over here.
A little whipped cream on it too. So, you were saying yesterday you thought that the euro, because it had taken out that 107 level, still had lower levels to go. Right on track. Any hope of a reflex rally in here? I was thinking between here and 105. We are diverging on the euro. Doesn't look great.
I'd like it to tap 105 if all the ducks align and this is month-end flows and we get a move there over the fix later. I'm going to be hovering intently, shall we say?
Okay.
To pick some up.
Yeah, it looks like it'd be. Yeah, and if it could get just back over 5.5, 560, this little breakdown here.
Yeah.
Also, you were talking about, you were a little negative Canada, and it's with the dollar strength we've had as of late, the last week or so.
Yeah.
This does look corrective. That maybe there is another pullback here from this 5.5 level. This failed here. It looks like it might be setting up something here.
Yeah. Now look at oil. Now look at oil.
Yeah, oil's getting ready to make new highs, right?
Yeah, and dollar CAD's going up. So that tells you what game we're playing in this one. That dollar CAD looks like it's the end of month flows, which have all been bullish the dollar.
Okay.
I'm going to look at that for a short if we get up into the 136s, I think.
Okay. And now that I look at oil, it is possible that this is a failing rally. I know that there counts higher, but have you heard anything from any oil bear? They're in hibernation. I mean, I don't know anyone who's not crazy bullish oil.
No, but how long could it keep going up? Based on just cutting supplies. At some point the demand picture's got to come into effect.
When you look at it on like a weekly, from where we were, I didn't do the fibs on it, but if you didn't know it was crude and you just looked at the chart, you'd probably be thinking that eventually this could just be a retracement rally that ends up failing. So gold still under pressure. Came in, silver broke the big flag. It didn't look on the 4 hour looked like a big flag, but on the daily, the flag didn't look huge, right? So it would have to get back over 2320 to convince me.
Yeah, I'm very good, and good morning, Dale, by the way.
Good morning, buddy. Yeah.
I'm very interested in what's going to happen at this end of month. It is not in general. A lot of people are not talking in general about metals into the end of month, nothing special fixings or whatever. But I noticed past months or several months that there is something moving on the metals as well, and perhaps even in oil, end of the quarter. And let's face it, I still think, and I said it a couple of times, that we get this final rushing in the dollar this week. It's ongoing, I reckon. I think we can stretch that a little further, but I'm starting to really watch the clock very, very intensely, and seeing for levels somewhere to perhaps catch a bit of a top in the dollar. I'm thinking about commodity currencies, thinking about perhaps the CAD as well, and cable maybe just overdoing it to the downside into month end as well. It's going to be an interesting watch from here, and I still think there's a possibility that this stretches just because of the flows, you know, and what the models are telling us, and yields and equity markets are telling us exactly the same, that it should be this way still until the end of the month. But so I'm very cautious. Not
48 hours away, right? 48 hours away. 48 hours away from that.
Yeah, exactly. You know, and also we have to be a bit careful, because there's been months where the bulk of the whole month end, quarter end is done by the date just before. And so I think we have to be a bit careful what happens tomorrow, after tomorrow as well, on the London fixing. Still morning for you. But yeah, I think this can go on for a little while. But rather than levels, I'm having the clock in view, all the time, you know. And I'm but I'm ready to really take the bulk of my cable shorts at just below 121. That's going to be good enough. It's been already going for a long way. I'm happy to take profits down there on most of it. Perhaps leave a leg into the final day of the month, but not even sure. See where we are tomorrow, really.
Okay. Probably it applies to the end.
Yeah, and I was just going to say, those guys are chit-chatting every day. They know exactly what's happening end of month, because they are being kept aware by their agent banks or the Japanese mega banks. They are very aware of what has to be done, and yen is one of those currencies that should see continued selling into month end. So I think it is just possible that we are getting into dangerous waters there, if this end of month continues the way it goes right now.
Okay, I'm looking at yields, and you know, they could make another run up here, but they're starting to look like that's your line.
Yeah, I mean,
great line, man.
Yeah, 463 around there, 465.
Doesn't that look a little heavy to you?
I think it starts to look enough for now, at least. Afterwards, we will see what happens. But it starts to look enough for now, in my opinion.
I mean, it could try it again. You know, distribution takes time. And, you know, this has been a straight line move.
Yeah,
and you can't find anyone anymore who thinks yields are going to drop. It's the opposite of when people didn't think yields could go up around 3 months ago, 2 months ago.
Yeah, the problem is they've all had to give up, you know, because of the treasury, because of credit spreads are now starting to go as well, and that's all still not bearish for yields, but we can see some setback, you know. Starting October, perhaps things quiet down a bit, and then start to watch data again. I mean, if it weren't for the treasury selling so many bonds, I would say this is starting to look like enough. But who knows, right?
Yeah, well, you'll know that it's starting to do something wrong if we start taking out the prior high at 434. But you know, you look at the weekly, this high that we have here compared to this high that confirmed, you know, these were all confirmed highs. It's not confirming it here. So
that's the danger, huh? There's a danger at trying to call for tops too early as well, right?
Yeah, so we're over, you know, it was a pretty big move over this high for it to be diverging. And I think on multiple time frames it is. Let's see, the 4 hour. Yeah, on this last high here, it confirmed. So it could make another run up here.
Yeah, and you know, Dale, I'm really, I think we are going to see some kind of setback or correction or you know, how do you call it, distribution or sideways even consolidation into start of October. But if the treasury doesn't stop, if people are just people will need also to start to refund a lot of stuff, and medium term towards the end of the year, for instance, I'm just I'm not going to say afraid, but we will know how to trade it. But I'm just worried that we may not even be at the end into the year end then. But I think
Yeah.
starting October, we are going into a period of perhaps a little more calm and the dollar correcting a little bit. Nothing goes one way, right? And for the time being, it's really starting to get a bit of a one-way ticket.
Yeah, I know a lot of people also looking for a low in the market in October, get out of the negative seasonal period of September. September lived up to its rep. Yeah, I still see this, I'm thinking I was a little bit conservative when I talked about 4,200 by mid-October around the eclipse. Maybe we're there
At the end of the month.
the end of this month.
Yeah.
The next couple of days or into early October. This is going to be an important area. I think that even some Ellioticians that are looking at this like a 4, a break to buy, and then we're going to go again, blow off into the end of the year. We take out 4,200. That bullish argument is weakened. And I was thinking if it did that, we would see, down into the spaghetti indicator around 3,900, hold the March lows, but down here. Then you sell the next rally to 4,200. Anyway, the bulls are starting to come out, and because too many people are looking at the head and shoulders stop. Although at least this one worked for a while. I mean, if you traded, say the formation Blake had, you're making money if you sold the breakdown. Not a ton yet, but you're making money. So 4,200, I think, is critical to the whether or not this was just a pause to refresh, or there's something more sinister happening.
And Dale, and good morning. You've seen all the confluence down there. And it's not just the 200-day moving average, it's the breakout point. There's channel supports, fib levels. It's so much support down at those levels. It's crazy, but it's got a hold too. And if it doesn't, then you're then didn't you say 3,800 by year end? Is that something that rings a bell in my mind?
Yeah, well, I'm looking for March lows, around the March lows in a lot of things like this, but I think it'll hold above the March lows, and I'm looking for March lows in what's interesting, although it is all one market. March lows would take silver into the 20 range and take gold back towards 1,800. So it's like I think the market wants to return and check those levels. They're moving at different speeds. I mean, the dollar is almost there at March levels. So, let's see.
So the one thing that we haven't really talked about, and matter of fact, I don't know if we talked too much about it over the last couple of days, is we're just a couple of days away from a government shutdown, and from what it seems like
above
what's
the
that?
March, the dollar's way above the March highs, so the dollar's already done it. So some are going to still yet to be tested. Some have already accomplished the March levels, taking it out. Dollar did.
Right, but the one thing we haven't really talked a lot about is like a potential government shutdown and what it looks like for the markets. And I voiced my opinion during the week ahead video. I want to first of all, Dale,
Grab
I know
the
you
screen, bro.
You talk or you read a lot of the news, and you like a lot of the news cycles. So I'm going to ask you, because I don't see a way right now that there can be anything done from avoiding a government shutdown other than passing some near-term gap funding bill. But it doesn't seem like there's any bill that can be proposed right now that would be passed at this point. So I think our best bet is that we can just avoid a shutdown with a short-term, stopgap type of something rather.
That only pushes it out to November. So you know, so maybe it would delay what's going to happen. I don't know. I think we're in this time frame going into October. You know, let's say,
Right.
you know, October is infamous for, you know, some type of washout happening. So I don't think we've made the lows in the S&Ps. I think it's all the whole market. Everything's going to come down to 4,200. What the dollar will do after that, what yields will do. I mean, we start taking out 4,200. I guarantee you yields will be coming back, coming in, coming
So
off.
yeah, and let's make sure we all know what how important 4,200 is. It is the breakout point, 161% extension of this move. By the way, we're testing the 127% extension over the last couple of days. Channel support. So, and I guess we could probably even do this. You know, it is the 38% retracement of this entire move up as well. So, a lot of big support levels. Are reside right there, so that you can see how important the 4,200 level is in the
What's
market.
a target on your Head and Shoulders breakdown?
Well, that would take us below 4,200, and it would take us more like 4,100 maybe, now 4,000, you know, to the 618. So, oops, no, I'm sorry, that's a mistake. About 4,100 right there, something like that.
Okay.
So, yeah.
Okay. That would take out 4,200.
It would. And you know, as Kman, you just said, and I 100% agree, nothing moves in a straight line. You know, so I don't think this is going to be an easy feat getting below 4,200. You know, there's going to be a lot of buyers down there. A lot of people are going to want to be on the long side. A lot of people are going to want to cover shorts. So it's going to be interesting to see how we play around this 4,200 level. I think as a whole. But hey, real quick, I want to go back to the conversation of the government shutdown. So here we are, a couple of days away. We got end of month, end of quarter. Ryan, U.S. government shuts down. There's no gap spending bill passed, or whatever you want to call it. What happens to the dollar here, in your view?
Probably not a lot. I mean, we've been here before. A shutdown only really impacts markets if it drags on. You might see a bit of a knee-jerk lower on the fact that we have passed the point of no return, if you like, without a deal, whereas we've been getting deals previously. And yeah, you're probably going to see yields rise because, you know, then worries about funding their debt and everything happens. So you get a bit of old risk off where, you know, but it's risk off for US rather than anyone else. But I don't think we get an awful lot because the world keeps turning. You know, government offices may get shut down. We may not get data for whatever. People still need to eat, go out, buy cars. Firms still produce, you know, so on and so forth. It just means that the data might be delayed. So I don't see an awful lot happening on this, but it could all be magnified by what's happening with these month-end flows. Because if, you know, you've got a perfect storm perhaps where the government goes into shutdown Saturday and we cross the line from September to October and this dollar bid evaporates and it's a double whammy. So any other time of the year, you'd say, fine, you know, dollar shouldn't do much. But on top of this month-end dollar strength that looks to be, it might be a different picture.
All right, Kman, what do you think? What do you think happens with the dollar here? Like I said, you know, just government shuts down, no spending bill. Market's going to a little bit of the rest of the market goes in a little freak out mode. What happens with the dollar here?
I think two reactions. The first one will be yields higher, stocks lower, and there's going to be some model funds trying to buy dollars, and then it will reverse for a while. And then, as Ryan says, it depends how long it takes. I mean, historically on the shutdowns, it all depends how long it lasts to see how much impact it can have on the economy. And historically seen, the dollar may lose about 0.5 to 1% pretty quickly after the fact, but then recovers relatively fast as well when the shutdown doesn't last for too long. So yeah, I think initially I'd say it can't be good. So if there would be a knee-jerk reaction to the top because of yields higher, I think that's going to be sold into. That's going to be, I think, the one or two wave reaction in the immediate.
Got it. You know, and
you've also got the effect that everything usually runs even better when the government isn't interfering with it.
what's that?
Everything usually runs better when the government isn't interfering in it.
This is very true. This is very true. I'm going to show you guys something from this is from Wells Fargo. Just one, they showed a chart on different shutdowns that we've had in 2013, 2018, 2023. This is where we're at right now. Obviously, this is it. Different dollar trajectories. Notice how, from this is the first day of the shutdown, and you can see about 2 weeks after the shutdown, the dollar during both shutdowns have sold off, but then eventually recovered. As
I wasn't too far away.
Yeah. What's that?
I wasn't too far away with what I said just a minute ago.
Yeah, initially you might see some selling, and then and if you think about like this chart, and here's like this is a dollar chart that we've been following obviously for a while. If you think about it, we could see as we're getting into month end, the dollar continuing to rally inside of this channel, and my assumption would be channel support would offer a good area to be back on the long side of the dollar in this type of situation, which would take us back to, let's just say, roughly 105.50, where we're trading at 106.40. So all in all, if you're looking at the trajectory of the dollar, is there any reason for the dollar bullish upside to be really disrupted even in a government shutdown, especially when we still have U.S. exceptionalism from an economic data standpoint? Which brings me to another point of conversation that we should talk about. We have durable goods orders coming out today, which could be a bit of a market mover. Ryan, what are your thoughts about today's data that's coming out for durable goods? Is it something that you're watching? Do you think it's going to be a mover today?
Yeah, potentially. If even if it's not a move, I want to see what the consumer related goods pictures looks like, because that's the big focus. What the consumer's doing now. We're seeing a slowdown in things like white goods, electronics, computers, that sort of thing, or indeed if the orders are still strong in those components, which then say that the consumer is still doing very well. This can always be a bit of a volatile number, durable goods, because you've got those big ticket items, defence, aircraft, so on and so forth. But yeah, it's another look at the consumer, and as we saw from the consumer confidence data yesterday, they're a bit softer than they were a month ago.
Yeah, absolutely. All right. Kman, you have any thoughts on durable goods that are coming out today?
Unless they diverge greatly into negative territory, I don't think it's going to have a big impact. The problem I see here is that the dollar is already very big. Imagine that they are good. Then people are probably going to buy more dollars, right?
Yeah.
Well, especially the time of the month we are in. So durable goods are not usually a very big mover, right? Unless there's something fundamentally changing. They are traditionally not that big a mover, but since
everybody's kind of focused on growth now, maybe it'll become more of a focal point for the markets.
Yeah, in future for sure. Yeah, for sure.
Yeah. The future may be in 6 minutes. We never know, right? Anyway, hey, one last thing. I want to talk a little bit about gold here. I know you guys discussed it a little bit. We had this false breakout. Was it a week and a half ago above the triangle or wedge resistance? Therefore, we knew it was going to roll over back below 1900. So here we are. We're five points away from new trend lows. I think trend lows are going to be bought up. And matter of fact, if you look at it from a harmonic standpoint, theoretically you should be buying it right there. That's a Gartley pattern or a butterfly pattern, excuse me, or is it cipher? Shoot, I never know. Anyway, right around this major trend line here. And if you think about that, buying gold below 1885 ahead of a potential government shutdown doesn't sound like a bad deal to me, because if we do have a government shutdown, that's going to be one of the asset classes that I think will outperform over the course of the next couple of weeks will be gold. So what are your thoughts on gold here, Dale? You would you be a buyer below 1885? I think I am.
Well, I still have longer term targets around 1800. So I like this pattern is nice and probably get a trade off of it. But again, I'm looking for March lows, and I think that's going to be part of an overall liquidation move. If this will imply we take out 4,200, and then we go to 39 and people sell everything in that environment. All one market. They all go up together. They all go down together. I just think, the metals will bottom in the fall. I don't think the market bottoms until the spring.
All right.
That's my take. I'm still bearish.
Still bearish. Okay. I'm gonna stay with you to about 1870. I think that's
Okay.
where the rubber is going to meet
guys.
the road there.
Thanks for your support.
Oh, wait, are you long?
Yeah, I've started going long against that fib and the 1885 level.
But
Just
does
a tech play.
I was
But,
not following what you're doing, but
That's all right.
does that make sense to you? Like the reasons why, like not from a technical standpoint, but you think about like the just the reasoning of if we go into a government shutdown, people, it's going to be interesting because people are going to sell treasuries, buy dollars, but do they buy gold as well, or do you get the traditional, dollar up, gold down? I think both will rally in this situation. So where did you start getting long, and why are you getting long here?
I got long at 95, which was against the fib, the 38.2, I think it is, of that move up from November. And then we've got that prior level at 85, which potentially marks the 1885, 1895 range. But it's clear on your chart we're still in a bit of a downtrend. So, the low may not come in till maybe somewhere like 70s or something.
One of the things I've learned about Fibonacci's over the years, and I'm gonna give you guys a little bit of stuff that I learned back in the 90s. When a major fib is crossed for the very first time, which in this case would be the 38% retracement, you can see how it held back here in June of this year. Once it hits for the first time, it's irrelevant moving forward. So that 38% retracement that you're trading on right now isn't so important to me. What'll be really important to me would be a 50% retracement on the way down. Just that's again, this is something that I've learned from Larry Pesavento. Larry. I actually sat in Larry's home in 1996
in Tucson,
and learned how to draw Fibonacci's with protractors from Larry. So that's something I
like the 61.8 you have there. Like that's
it
where
comes in all the way down at 1790. That one?
Yeah, that's another
far.
reason for me being bearish.
That's far. All right. So anyway, so just a little bit of education on Fibonacci's moving forward. Anyway,
I'm the same. I ignore fib levels when they've been crossed. But in this case, it's a level all by itself. It held the fib in July. It held that level around that level in January. Held it going back further than that to March last year. So it's a level around there. you know, it's a big figure, call it 1900. So it's a bit of a level irrespective of the fib.
I just realized we are oh, here we go. Here comes the data. Shoot. So let's see what we get for durable goods. Stronger. Exceptionalism. Here we go. Here we go. US
core goods are strong. 0.9. That capital goods non-defense ex-air thingy. That's strong as well.
What are yields doing?
Let's see here. Maybe bouncing back a little bit, but I think
Not much.
yeah, a little bit, not much. Let's look at the 2-year. Spiked up and come down a little bit.
Okay.
You know, it's got the euro back at you know, at its lows, and dollar yen's, you know, back above, well, near its highs. So the dollar is responsive, but it's kind of like you know, I think you know, the guy's assessment of, you know, the end of month flows are going to be dominant, and I think that's what's driving the market right at this moment. So yeah. And look, by the way, this is like a support I think is going to be pretty critical on the way down. Here is the 105. You can see where it connects here, there, and it should.
That's what Mark said on Friday. One more flush, 105.20-ish he was talking about. So there's a line. He was probably looking at that line. He stole your line.
Yeah, you know,
when you were
everybody's
interviewing
my
him,
damn lines.
Yeah.
Robbers. Anyway.
Well, you know, I want everyone to Google Shutdown by Jan and Dean and play it today. That's my government shutdown theme song. Great song. So,
well,
and Dean.
I want to remind everybody, for those people that are not listening in to Ryan and Kman during the flow show, make sure you guys are listening in. But you guys won't be around tomorrow, will you?
Nope.
Oh, all right. So you guys are going to be MIA tomorrow, but back on Friday. So if you guys are not listening to Ryan and Kman on the Flow Show in the mornings, make sure you get your daily dose of FX early in the morning, or at least, you know, in the European hours. And I want to thank you all for being here. Do you have we have an interview today, Dale? I'm sorry.
No, Pedro rescheduled for Friday.
For Friday. Okay, well, we got a few minutes to talk a little bit more about a couple other things then, which I think are very important. I want to talk, since real quick, Ryan, Kman, you guys still around?
Yeah, very round.
Okay. Oh, okay. We won't keep you too much longer. Real quick, Kman, I know you were talking about the bearishness of the sterling. It's a chart that I posted this morning, and you know, it's something we talk about, you know, quite a bit around here, is the big head and shoulder pattern. We're getting close to completion. A lot of technical levels here. 127% extension. Now let me see if I can move this. Well, not moving the wrong one here. There we go.
Look at that RSI.
Yeah, RSI is oversold. But, you know, when you start looking at RSI and you go, wow, that's oversold. And then you have to go back and look historically and say, it is, but can it be more oversolder? You know, and that's when, you know, I start looking back over here and going, yeah, it can actually get more oversold than where we're currently at. So are we oversold? Yeah. Can we become more oversold? Sure. We have all these targets coming in. Yeah, and this is a very bearish move.
That's for sure.
Very bearish move. You know, we got a lot of targets here, head and shoulder targets, blah 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 blah. 127% extension, 78% retracement of this entire move. You can see it right there. But what can turn the sterling higher, Kman? I mean, you know, I see all the targets coming in, and I know you said something to the effect of, it's gone far enough. I agree with that. It's you know, getting to those levels that are going to start finding buyers naturally. But what can turn the sterling, in your view?
Data, but real growth data that can hold it. And for the time being, it's not that pretty a picture. So I'm going to make a distinction between cable in itself the dollar bit of it, and perhaps sterling as a currency versus other crosses, versus other pairs, versus other currencies. Sorry, in the cross side, and there I'm less. I'm less.
So here's the actual contract, just so everybody's got a point of reference of what Kman's talking about.
Yeah, I'm less optimistic in sterling versus other currencies, certain other currencies. But cable, I think, yeah, it's because there's the dollar bit in it as well, and it did come quite a long way. We know certain factors who are driving it lower as well, which is under other among other things the end of month, but also the relative behavior of FTSE and stuff. So yeah, I think on the cable side it could be enough for now. I'm not sure on versus other currencies. So I'm not going to go just long cable. I may try another dollar if that's it. But I'll be happy if we get it under 121 towards 120 or so on any extension, any stop loss run as well. Which I think, by the way, you were talking about the S&P at 4,200. If I may, I've got the impression that there's going to be a stop run below, and then we are going to see some kind of a stronger rebound also. I'm seeing this level as being somewhere too fragile because of everything that's going on, because of the yields, because of the bond market and things. I wouldn't be surprised if there is a stop run below, actually.
Yeah, I mean,
going down to your 50%.
It is a big level, yeah.
Going down to your 50% on a stop run, why not? You know, I mean, the 40.5 there, which is also your head and shoulder target, roughly, right?
Yep, that is correct. I mean, and it seems logical. I mean, you think about like everything that you know the world's going through, and it seems logical. I for one actually think we're going a lot lower over the next 6 months. I think we're going to get into triangle support areas around 3,800 over time, but obviously first things first. So yeah, why couldn't we get down there? I agree. Hey, going back to the conversation about the sterling though. Ryan, you said, and I know you did your show with the trade-off show with Michael Brown. And I watched that yesterday. It's a great show. If you guys aren't watching that show from with Mike and Ryan, you should be. Apparently, you don't feel you live in a banana republic, but all the news, things that circle around the UK say, can say otherwise. I'm obviously exaggerating here, but you talk about like a lot of the news cycle talking so bearish about the UK, maybe unjustly so. But the pound has been under pressure. What do you think could turn the sterling here?
Apart from Bailey resigning, again, and Michael's going to tell you off for calling it the sterling, and I'm going to make sure he knows about that as well.
The great sterling. We should start calling
His Majesty's pound.
His Majesty's sterling.
His Majesty's pound. Yeah. Again, it depends on what you want when you're going to look at. The pound's in the same boat as everyone else. We're in the race, the growth race. Who's going to come out on top? What can turn the pound around? As Kay said, better data. What can turn it around? Data being as it is, and horrendous euro data. Then you see euro sterling suffering again. Cable is a different kettle of fish because obviously everything's against the dollar, and you've got to remember that in size terms, it's no contest. The pound over the dollar. What happens is the dollar is always going to trump what happens in the UK. So what can turn it around? Hitting some decent tech levels, as you said, where traders go, you know what, that's enough. We've just seen a 3-4 month trend lower. We're hitting some of the big traffic areas down around that 120s, 119s. And the market goes, right, okay, that's enough. We'll start buying it up now, closing some of these shorts and buying it up. So as always, for us as traders, you just got to look at your chart and think, where are the areas it may pull up?
Yeah.
I think everyone needs to write down what Ryan said to Artemio. don't get too caught up in correlations. Every asset trades on its own reasons. That we get moments or correlations is one thing. But if you're watching stocks so much as a clue to trade US dollar, you might as well just trade stocks. So every instrument is like its own individual being, so trade the chart you're trading.
Yeah, that's a great point, Dale. Correlations, that the old saying, correlation is not causation.
They work till they stop.
Yeah, I mean, but it for me, it's always been more of a I'm not trading. I'm not going to trade the euro long because the pound is bouncing type of thing, but it should get your attention, or vice versa. You know what I mean?
Give you biases, but
yeah, it could give you a bias or confirmation bias, especially if you can, line up a few at the same time.
It tells you which way the wind's blowing. Like dollar CAD today, oil's higher. Naturally, you think if the correlation today is strong, dollar CAD should be lower on CAD strength, but it's not. So today, right now, the correlation is not working. So the wind is blowing the dollar, not the CAD.
So you're not caught pissing in the wind, right? Right.
Exactly.
But really, very good mentoring advice, Ron.
Absolutely, 100%. Hey, I want to one last thing. Kman, are you still here? I'm sorry, I don't know.
Yeah.
Hey, real quick. You made mention of something, and it seems like we do this every end of month, end of quarter. But I think it's important because you said it this morning. I was drinking my first few sips of coffee, and I was looking at yields. And you said something that really should be said to the public here. We are a couple of days away. We're Wednesday before the end of month, end of quarter. You mentioned something called value date. Can you explain that to traders really quick so they understand why it could be an effect today?
Okay, apart from a few currencies under which the CAD, the loonie, is trading value date tomorrow, but when you do an FX trade, you're always have your trade date, and then it's the payments are made 2 days later. So we trade a value date in spot FX, and in most pairs that value date is 2 working days away. So if you look at the Friday being the last trading day of the month, 2 days before is today. So today we are trading value date Friday, and usually value date end of month, that's where really the fixings kick in and where we can have some US corporate doing their shopping and things. And that's the value date. The value date is not your trade date. The value date is where payments have been made for the operations that have been made on the trade date.
Thank you very much. And I read an article yesterday, and I need to go back and find it now. Because I briefly read through it. It's one of those, speed reading type of things that I did throughout the course of the day yesterday, that actually value dates are changing and by a day, and it's throwing it's throwing dealers off quite a bit, as there's a big change coming in settlements.
Are there? I haven't read it.
I read it on Bloomberg or Reuters. I can't remember. I have to go back and look, see if I can find the article. But there's something that is actually changing, and I can't remember if it was changing like by the end of the year or when it was changing. But anyway, those this end of month, end of quarter, there's a lot of flows happening right now, and so trying to make sense out of every single move that you see. Just keep in mind there's more at work than may meet the eye than what you're typically used to seeing, and it's an important it's an important topic that Kman's talking about going into the next couple of days. So sometimes flows will trump news and headlines to many extents as well. So Kman, thank you very much for that. It's something that everybody needs to hear. So Ryan, Kman, thank you guys so much. I know it's an extended show today since Dale's guest Pedro da Costa moved till Friday, which we'll be excited to have Pedro here. And Dale, thank you for guiding us every single day here on the F.A.C.E show. We really appreciate you.
Hey, little Cobra, don't you know I'm gonna shut you down? I took my Cobra down to the track, hitched it on the back of my Cadillac. There were plenty of people waiting for me. There were many Stingrays and XKEs.
What is an XKE?
Huh?
What's an XKE?
I think Jaguar.
Oh, that's
Yeah, I didn't know they were race cars back then, but that's the 60s. Anyway, hello,
nice.
Jan and Dean, guys. So anyway, that's why it's great to have a senior citizen on the team. Oldies but goodies.
Bravo.
So
That's what I
don't
would say.
don't just count your pips, count your blessings, everyone. I'll be glad when we get the month end stuff over, and you know, we can start trading on technicals instead of flows. But I guess you always have to trade flows. Anyway, good luck out there. Remember,
Thank you, Dale.
you don't have to trade, you know, there's not a law. You can just sit there and let things come to you. So Kman, thanks for edifying the community, and Ryan, great advice today, and Blake, and you could join the team in a half an hour. And if you're not you know, able to do it, find a way to do it. That's a wrap, everyone. You have a good day, and we'll see you tomorrow. Adios, team.
Dale.
Thank you, guys.
Thanks, Coach.
Bye.